Okay, guys, so long overdue for a video. Came across some really cool charts, want to talk about this. So now, this is perfect, okay? So a lot of people are going to get crushed in their stock portfolios or 401ks because they don't see this bear market coming. Um, Nor do they know how to invest during a bear market, okay? So especially this next decade is going to be a little bit different than some of the rest. So let's take a look. So one of the things I want to look at that I've been looking at is the Dow to gold ratio. Okay, so now this shows what the index, okay, the Dow Jones divided by the gold price. Okay, and you can see there's some pretty big swings. So this shows where, if you're buying down here, the Dow is cheap. Okay, and if you're buying up here, gold is cheap. All right, so now let's look at some of these peaks. Okay, so we've got 1980, we've got the 2000s, 2012. So you can go here to TradingView and let's take a look. So here we got 1980. You can see there's a huge spike in the gold price, right? So right here, you want to be buying the Dow. This is actually the S&P, this orange line. So you can see a huge run up here on the S&P. Boom, if you would have booked some profits, switch to gold, then you get this huge run up here on gold, which clearly outperformed this, this portion of the S&P. And then since 2012, we've been on this bull run in real estate, stocks, everything. Okay, and now we're kind of hitting some headwind here. Okay, so as you can see, the orange line, the S&P, is pretty peaked out. So let's go take a look at some of the things that I've been looking at. So here's a little bit better charted gold to Dow ratio of where we're at today. So these trend lines are acting as resistance and support, and you can see it's already bonked its head to about to be 3 times right here. So this is super favorable for gold, and it's set up to do really, really well. In times of recessions, people are going to run to gold. Okay, institutions are going to run to a safe haven asset. Bitcoin is kind of a risk-on asset. It's going to go up with the stock market. Gold is going to be kind of the opposite. So a lot of people could be, 50-50 crypto and gold, and you're going to do pretty good. Each one is going to kind of swing up, and keep your portfolio pretty balanced. So here's something I've been looking at, and it just shows a really favorable setup for the next, 5-10 years. It's looking really good. So another thing that we've been checking out is commodities. So everyone's noticing the price of everything going up, right? Everything from paint to sugar to gas, copper, steel, lumber, you name it, it's all going up. And again, here, this chart really shows the cycles, okay? Everything is cyclical. Stock market, real estate, you name it. It's all cyclical. Nothing stays the same. So you can see that there's these periods where it's historically cheap, historically expensive, historically cheap, historically expensive, and then back to cheap, right? Just keeps doing this. So right now, we're at a favorable point for commodities. So a very safe play is definitely commodities for sure. Some things that are going to do really good: lithium, uranium, copper. Okay, so lithium for different EVs. The whole electric vehicle market is going to be basically electric by, call it 2040. Hardly any manufacturers are going to make, gasoline cars. So definitely Google this chart, check it out. If you want a little bit more in-depth stuff on this, let me know. I've also got some partners that can help with looking at portfolios and stuff. So this is something I'm looking at. I think you should be looking at it too. Be careful with this bear market. A lot of people are going to get wrecked, okay? That they don't see these big cycles and these forces at work, but we can kind of clearly see from these charts that we should be looking at these things, okay? Alrighty, thanks guys. Take a look at some of the links below. If you guys need anything, let me know.